Now, the other piece, Rishi, is private credit. And I know you spoke about it briefly, but I just wanted to understand. In India, it's still, I mean, for lack of a better word, a nascent market, so to say.
Yes.
3, 4, 5
Yes,
players
yes,
at
yes.
best, not too many. But people are now starting to pick up that pocket. How do you see the growth of that market in India?
It's still to evolve. I mean, if I think about the general order of play, right? Even if you trace your steps all the way back to how the US market evolved, and then how the European market evolved, etc. US private equity started first, then it came across to Europe, then private credit came behind private equity, and it's most developed in the US market. Even in Europe today, private credit is not quite as evolved. You know why? Because it's still largely a bank led market. India is an even more bank led market. Emerging markets tend to be bank led markets, right? Because the flow of credit and the risk return adjustment that is necessary is not quite as prevalent in the private markets yet. So, exactly in the same sequence, the playbook that we have followed earlier in the United States, subsequently in Europe, and now in the emerging markets, including India, is initially PE, closely followed by real estate, and private credit shall, inevitably become a deeper, more mature asset class. But that is not the case today.
So there are players who in that space, and I don't know what your plans in India about private credit. But there are players in India who are offering annual returns of between 15 to 20% pre-tax in private credit. Do you? I mean, and like which is why I said it's a nascent market, but not too many people talk about such high returns and still talk about that pocket as well. So what's missing
So
here?
you asked it, frame the question the right way. What's missing is the following: when you look at that return of 15-16% from the lens of a foreign institutional investor, two things happen, right? One is net of tax, and the second is net of the expected depreciation of the underlying currency,
Currency.
which is 2.5 to 3% per annum on average. You're looking at a net rate of return that is in the high single digits. If that same investor can get the same net return by investing in US markets and European markets, their conundrum, their paradox is they're not getting the perceived risk premium
Sure.
of investing in an emerging market.
Sure, sure.
And the absence of that risk premium is what deters the flow of capital into that asset class from foreign investors. For domestic investors, I completely agree with you, right? I would think that it is entirely natural for high net worth individuals, family offices from India to be deploying increasing amounts of capital into the private credit space in India, right? And that we would certainly wish to tap into. I mean, that is a secular trend, and I think it's going to manifest itself sooner rather than later.